And as promised, let's shift focus to vegetable oil market, and that is because India's vegetable oil imports have declined to 16 million tons in oil year in the current oil year, down from 16.5 million tons in the previous year. India, remember, is the world's biggest vegetable oil importer. Palm oil accounts for nearly 60% of India's vegetable oil imports. But to understand the latest factors that are aiding vegetable oil imports, palm and sunflower oil pricing trends and demand-supply dynamics, we now have Dr. V Mehta, Executive Director of the Solvent Extractors Association of India, joining us. Mr. Mehta, thank you so much for taking your time out and speaking with us. First up, let's talk about the fact that imports of vegetable oil have been declining. We saw that trend last year, and it is expected to continue this year as well. Help us understand what are the factors which are aiding the move and what is the outlook going forward.
See, year before last, the total import was 16.5 million ton. The last year ending the October 2024, the import has been reduced by about 500,000 ton. The reason is, one, we had a good crop, and second reason was the high price also squeezed the demand in the lower segment of the society. So that has checked back the rising import and also reduce the import by 500,000 ton. So actually, in fact, every year we need about 800,000 ton to 1 million ton extra to feed the new mouth and to meet the per capita consumption. When you reduce 500,000 ton, it means you have taken care of about 700 to 800,000 tons of per capita consumption and new mouth, and you have reduced by 500,000 ton. So total gap is about 1.3 million ton. Yeah. Now in the current year, which you asked me, looking to the crop of soybean, we are harvesting the bumper soybean crop. Again, the groundnut, we have a record groundnut crop, and expected the mustard crop will be much better since we have all reservoirs are full, subsoil moisture is very good, and also the price are attractive for a farmer to expand the acreage. So if you put all together, I'm expecting a bumper mustard crop also if weather remains conducive. So it means the total production from the last year to this year will go up at least by 2.5 to 3 million ton, equivalent to 1 million ton extra edible oil would be available to you during the current year. But there is one caveat. There's a bigger issue is the disposal of the meal. There's a glut of soybean meal in the world market that is hitting each and every oil mill. And when you are processing the oil seed, I'm getting the meal as a second product, and the demand for the meal is reduced, or rather the excess supply is there, price is reduced. There's a disparity in exporting, whether it's a rapeseed meal or with a soybean meal. So you have to support the rapeseed meal or soybean meal. Otherwise, it will hit your MSP. That's one part. And second, it will hit the farmer. Farmer may not get the right price. And third, your export will go down overall. So this is a gray area. If we can crush all the quantity which is we produce during the current year must be crushed, then we will be importing at least 1 million lesser than last year's. Yeah. Okay, ma'am.
So the trend of lower imports is expected to continue going forward as well. But Mr. Mehta, also wanted your thoughts. So the government in September this year increased import duty by as much as 22%. Was this one of the factors which drove a decline in imports? And do you expect another round of increase in import duty going forward?
I have a doubt. Government has to balance between the consumer and the farmer. The last decision was taken in the interest of the farmer, and the duty hike. So now is a 27.5% duty on the crude oil. I am not expecting any further hike in the duty. Probably, if the interest price goes up much higher than what is the current, we are already on the higher side. If another 200, 300 goes up, then government may compel to reduce the duty at the later stage. Maybe in after 2-3 months, they may have to review in the consumer interest.
Exactly. My next question, Mr. Mehta, palm oil prices, as I recollected in the international market, have risen nearly 30% on a year-to-date basis. Do you expect the trend to reverse anytime soon? And what is the current situation in the domestic market?
The, basically, if you look at the overall vegetable products in the world produce about 260 million ton of the vegetable oil. After that, 20%, that is 60 million, is being used for food. And palm oil is mainly used nowadays. Increase the palm oil usage increasing in the biodiesel. So it is all. So you are moving your vegetable oil from a food to the energy sector. In a process, your palm oil getting reduced, availability of palm oil getting reduced. Though the production is going up, availability of food is being reduced. And another gray area, or not gray area, even today is a confirm. Indonesia is going for B40 plant, B40 biodiesel plant. It means they will blend 40% biodiesel produced from the palm oil. It means it is a 3 million at least ton will be sucked for the biodiesel. That will also push the price upward. I'm not expecting the price to go down immediately on the palm oil. Though the palm is overpriced. Normally the sun is the highest, then soya, and the lowest is the palm. But today all three, with the sun, soya, palm, moving the same range. And I'm not expecting the price will go down in the near future.
Expecting palm oil prices to correct in the near future, although they are overpriced at this moment. But also wanted your thoughts on the minimum support price, which the government recently increased for oil seeds. Do you expect any revision over there anytime soon?
No, that. See, even after imposing that 22% import duty, soybean is still below MSP. And also I'm expecting that rapeseed, which is right now is a final 5,950 is the MSP and being quoted at 6,200 or 6,400 in the mandis, may go down below MSP. May go down by below MSP. So both soya and rape will be below MSP. Government has to take some action. But see, when you crush soya or rapeseed, you must get support from either the crushing of oil or meal. Today, oil is okay, but meal is dragging down your price here. So you have to push the export of the meal, whether the soybean meal or rapeseed meal. And that is all because we are outpriced by about $50 to $75 in the world market. Because there's a glut of the soybean meal in the world market. This year, world producing about 422 million tons of the soybean compared or at least 28 million higher than last year's. And soybean being crushed for the oil used for either food or energy. In a process, you have glut of soybean meal. It means the meal, there's a surplus of meal in the world market. It's hurting both soybean meal or even a rapeseed meal in India too. And another area, gray area is not gray area, the biodiesel, the ethanol biodiesel, ethanol when it's being produced from the maize or a rice, you are producing ethanol, but same time you are producing DDGS. The DDGS is being used for a cattle feed here. So in indirectly the demand for soybean meal or rapeseed meal or a rice bran meal is reduced from the domestic also. So you are in such a peculiar situation where you are not able to export, not able to sell in the domestic market, and that will hit your crushing and overall availability of the edible oil itself. Yeah. So we have appealed to the government again and again that to support this export, you must come out with some incentive for export of all oil mill, including rapeseed mill. Yeah.
Next question, in terms of demand environment, both in the domestic market and in the international market, especially because of the rise that we have seen in palm oil, help us understand, is there any impact on demand on account of increase in prices?
See, normally when the price goes up, edible oil, there's elasticity, particularly the lower segment of the society, the poor or the lowest of the middle class. They can reduce their consumption. If they are eating the fried food thrice in a week, they may reduce it twice in a week. It happens here. And that normally shifting is about 200,000 to the 500,000 ton depends on the price. And that exactly happened last year. Since price ruled high, consumption has gone down. The same thing will happen in current year also. The prices are ruling high and expected to rule a little more higher. In that case, definitely there will be demand squeeze in the lower sector of the society. For you or me, hardly makes any difference. We buy Suppose we needed 2 or 3 kilo, we buy every month, irrespective of the price, yeah. But that's not the case with the lowest segment of the society. They reduce their intake, yeah.
Clearly impacted demand also. Mr. Mehta, thank you so much for taking your time out and speaking with us right here on ET Now. So those are the latest trends coming in with respect to vegetable oil market.
If you like this video, then like, share and subscribe to ET Now.